So hello everyone, and welcome to Virtual Coffee with SEG. You know, these virtual coffees have proven to be really enjoyable. Not only are they an opportunity for me to acquire valuable insight from our industry leaders, they're also an opportunity for me to chat with my friends. And today is no different. I'd like to welcome Alan Cline. Alan is a Senior Managing Director at Vista Equity Partners. And this is hard to believe, but both Alan and I joined our respective firms in 2001. And I've watched in awe, admiring Alan and Vista's successes over the past 20 years. So Alan, welcome to Virtual Coffee with SEG. I think you've got a water there.
So a little later in my day, so it's water for me now.
Cheers. So why don't we go ahead and get going? Alan, I think it'd be great to start with a brief bio. So would you mind taking a moment to introduce yourself?
Sure. So background-wise, I've been at Vista most of the last 19 years, and I would say you can put the pieces together. Educationally, I was an engineer, and then at UVA, and then an MBA from Stanford, and then career-wise, I was at Goldman Sachs doing the M&A side of things for general industry, and then focused on the technology practice, and then have spent kind of the rest of my time, with the vast majority of it sitting in the chair I do today, between the entrepreneurial world and the investing world, with three companies I've helped start. The one that people are most familiar with is a business called Fandango, a movie ticketing business. And then the vast majority of my career has actually been at Vista Equity Partners here for the majority of the 19 years we did.
So I'm gonna go ahead and start with the first question. I'm gonna apologize in advance because there's multiple questions wrapped up into this one. So Software Equity Group, we recently published an article highlighting how SaaS businesses would truly be tested for the first time during this pandemic, and we called it Surviving the SaaS Pressure Cooker. I'm curious how Vista's portfolio of SaaS businesses and perhaps Endeavor Fund companies have held up over the past few months. I'm also generally curious how the durability of B2B SaaS models is holding up. And then lastly, how you believe this period impacts demand for SaaS businesses in the future.
Thanks, Alan. There's a few questions tucked in there, so I think we can hit them all. So first, overall, the Vista portfolio is holding up very well, and I would say that's for a few key reasons that I've categorized into three buckets. First, the overall strength of the software business model is really proving its value right now. Second, Vista's focus inside of software on mission-critical, high ROI, high recurring revenue, high retention businesses is an even stronger element of that sector. And then third, I think very specifically for this year and the challenges we're all facing, we were very quick to react and help our executive teams understand the implications for their businesses and adjust quickly, so that by the end of March, we were already operating in our kind of COVID plan world, as opposed to kind of adjusting for it then. And I think for a large part, that is going to drive our companies to have good years in 2020. Maybe not everything we thought it would be in January, but frankly, good years nonetheless. Second, tucked in there is kind of a commentary on the broader SaaS universe. As you allude to, over the past 10 years, we've been largely in an uninterrupted bull market, and this has led to a lot of growth and value creation, but also a lack of appreciation for the impact of a business cycle and how to manage your business when all is not well. And for at least the last 5 years, virtually every business we've met with have talked about how they'd be largely unaffected or minimally impacted by a recession. By year end, we're going to know who was right and who wasn't. Related to that, we also have an entirely new class of CEOs who, many of whom have never been CEO through a downturn. 10 years is a long time, and that's the gap we've had. God bless, it's been a great bull market on that front. In the end, though, I do think there'll be a lot of learning. There's going to be a tremendous amount of managerial growth this year. And then honestly, I believe an improvement in how people manage their businesses when we come out of it. And then to your third point, what does this mean for SaaS? SaaS is ultimately a delivery model and a pricing model. Not all SaaS businesses are created equal, and this period of disequilibrium will sort out quality among the SaaS universe. And although no one has a crystal ball, I suspect what we're going to find is the companies that do the best this year are going to warrant a premium value going forward, and those that don't have that same durability are going to see that reflected in the interest in values for their businesses. Beyond the economic implications, I do think we're seeing, we're all experiencing it firsthand. What we're seeing for remote work will drive even more demand for SaaS. Again, not everyone's going to be created equal. Those that are aligned with kind of a distributed workforce working collaboratively and enabling folks to do that successfully from different environments are going to be the winners on that front on a relative basis.
Lots of good points in that. One of the comments you made was, two SaaS businesses are created equal here. So in that regard, today, how do you define an attractive vertical or product category, and what are the hallmarks? Maybe what are the top 3 things that you look for when evaluating SaaS businesses today?
That's great. We touched on that part of that as the last question. And given this crisis is having a disproportionate impact on different industries, basically this isn't just a financial crisis, but it's one that impacts the consumer economy, and the U.S. economy is roughly 70% consumer driven, and then frankly, especially anything that has either an in-person, a group, or a travel component to it, is being wildly disproportionately affected. And at Vista, we love verticals. Probably 2/3 of what we've done in our history have been businesses either vertical by design or vertical by go-to-market, and we still love those today. And what we have learned is that seemingly safe downside assumptions are not infallible. Who would have predicted worldwide passenger air volume would decline over 90%? Down 30, down 50 seems like, wow, I'm being like really aggressive in what downside could be. But no one modeled 90. Who would have predicted it would be illegal to go to a restaurant, a barber, a gym, or a concert? And therefore in some of those industries, there's a period of time where demand went to zero. So I think we all need to rethink what risk profiles are and scenario planning means for our businesses. And we've been here before. I mean, the last energy slump, we saw oil prices drop 75+% in 3 months, and that wasn't in anyone's prediction range either. So the 3 things that I would say, if I were to direct people to just 3 things. First was, is it really mission critical? And if yes, great. If not, well, how close to mission critical are you? Can they live without it? The second is, what is your market size segment vulnerability? And so I think we're finding SMB is far more vulnerable than the middle market or enterprise for a variety of reasons specific to the business's size, and then also their access to capital markets. And then frankly, your end customers' health and durability and the quality of their business model matters. And I'll give you 2 more for free. Single factor risk are killer. Customer concentration, regulatory risk, and the vulnerable industries are rearing their head now in a way that I think will remind folks. And then on a positive side, I think some of the secular trends that we're seeing are really prevailing in the face of the shocks of the system. Cybersecurity, risk management, as we mentioned before, the dynamics are driving more remote working environments.
Yeah, that's great. I agree with all of that. This new word durability, man, it is being widely used today, but it's appropriate, right? We're really being able to really test these things and see how well they're coming up. So this is I think this is my favorite question of the 5 questions that I've got, 5 or 6 questions I've got for you today. So I mentioned I'm truly in awe of Vista's successes. It's remarkable. I mean, to think about what's happened over the last 20 years, but I'm also just wildly impressed with Vista's diversity. I read an article on Vista's website, and it surprised me. Women make up 43% of Vista's workforce, compared to only 18% for the private equity industry on average. And then further, about 30% of Vista's employees are people of color. And 2 out of Vista's 6 funds are co-headed by women. Alan, what has Vista been doing to drive these higher levels of diversity?
It's a timely topic for sure, Alan. And a couple things. So if you look backwards and say, hey, what do we do? And I'll comment on what we're doing going forward as well. Frankly, it's focus and effort. I mean, it's a rethinking how you're doing things and then being committed to making a difference. The fund I co-head today, there's 4 partners, there's only 1 white male. And so, we ended up with that fund specific dynamic, not by design, but by the fact that we were doing the things upstream to help make diversity a little bit more natural in the construct of some of our organizational design points. Further to that point, I just spent some time last week with our director of diversity and inclusion talking about exactly the same thing. And the central part of our conversation was, yes, we've worked hard at it, and I think we've done an above average job in the industry, but frankly, we can do better. And right now we're focused really on, doing the work to say, what can Vista do? What can our portfolio companies do? And then through our influence, what can our vendors and partners that we work with do better? And then as part of that, what can we do to kind of really take a leadership role in that? We believe as majority investors in a broad number of technology companies that if we do this collectively, we can have a far better impact than individually working on it alone. And as many people may be familiar, Robert Smith, the co-founder and CEO and chairman of Vista, is doing a number of things, not just through Vista, but personally. I'd recommend people Google Robert Smith and Vista, and you can see a number of the things he's doing, including a few things announced this week that are, big ideas are going to have broad impact. And I think the good news is, that what we're seeing is, greater engagement and really a willingness of people to kind of listen to what we can do differently and better in the future. And we're starting with really kind of three things. So first is ourselves. I think if you don't set the example as a private equity investor on what you're doing in your own organization, it will fall upon deaf ears on the companies you invest in. The second is with our portfolio, and we are a high-performing firm, and we're looking to drive performance, and at the same time, how do we bring the diversity and inclusion elements more to the center of what those companies are doing? And so as investors and board members, I think we can help in a number of ways. We can help folks assess where they are on their maturity curve on that front. We can provide them opportunities and resources and, frankly, examples within the portfolio or within Vista that they can say, hey, we too can do something like that. And then, frankly, provide the reporting and accountability processes to ensure we're making progress and, frankly, reward those that are doing great and, by virtue of those who aren't, frankly, probably a little bit of shame. And then the third thing is really thinking about our sphere of influence, which goes well beyond the four walls of Vista or even our portfolio, which is how do we interact with our vendors? How do we select our vendors? How do we think about the same with our investors? And then if we do all that well, I think the competition will follow. I think Vista is in a leadership position in many regards. And I think if we set an example, I think it gives people a path to follow that will hopefully have an impact beyond what we do directly. And then finally, on this topic, I would share Robert's optimism that we are in an inflection point of increased awareness. For many people, some new enlightenment, which I think is better late than never. And what appears to be a sincere interest by many people to do more, to do better. The proof will be in the actions that follow and the results that we try to generate. But I am more optimistic today that it feels like there's, I'm a big believer in the laws of nature and momentum and inertia are two of those. And I think, in the corporate world has been in a state of inertia on this topic for a long time. Some progress, but far less than we should have made. And it feels like we're having a tipping point to momentum. And I think the time to act, to capitalize on that momentum and the willingness of people to listen, adopt, and change is now. So I would just keep an eye out for kind of continuing to look at what we're doing and give people ideas, and hopefully we continue to walk the walk on that front.
Yeah, and I've read a number of those articles and that you mentioned from Robert, and I would encourage people to take a look at it. There's some great stuff. And one of the things that struck me in one of those articles was he made a comment about the younger generation and how we historically this generation, we've been saying, this younger generation, they're lazy or they're millennials or whatnot. And one of the comments that Robert made is he applauds them for getting up and taking action. And that's just incredibly powerful. And that struck me. And so I agree 100%. I just applaud this generation this younger generation for what they've done. So thank you for that. And really impressive what Vista's been doing and is doing. So Alan, last question for you. What's the one piece of advice that you'd like to give to SaaS operators right now?
One piece of advice. If I were to pick one for right now, as a 2020, I think there's a great opportunity tucked in here. And it's to be introspective, get back to basics, and then use it as a reset. And I would start that by revisiting your customer value proposition and really deeply understanding, like, how much value are you creating for your clients? How much do they see it and they value it versus their alternatives? What else do they need and is on their to-do list, and has that priority list changed as they've refocused on their businesses? I would start with that, number one. Close second would be revisiting your commitment to your customer success as part of that, because I think it's one where when you're grow, it's too easy to say, hey, let's put more effort into how fast I can rack up a new logo list, as opposed to making sure my current customers are wildly successful. I think that's always true, but I think it's a good time to refocus on that. And then I think there's an opportunity and really a need, particularly given the work from home that many of us are still experiencing and the jobs we all hold, is revisit your social contract with your employees and understand how your culture is either thriving or straining during this time. Culture can be something that you write down with platitudes on the wall, and now it's a time where it's going to be tested as to whether it's an asset for your business or a liability, and have those conversations and understand that. It's a very hard thing to do, but I think that's an opportunity. And then I would reassess how you're spending your time. I think the obvious one and probably the most impactful one is, how much travel do you really need to do? The world has been trained on kind of things like this and Zoom to make interactions. And so, is there a way to kind of leverage that in the future? That means you can create a different cadence of how you're spending your time, and then take all of that and reassess your goals and objectives to make a new plan. And then design today, because you've got 6 months and change to redesign what you think you want your business to be in 21. And I think that is the gift that's tucked into 2020, which is when the game slows down, you have the ability to do all these things. And those who really focus and do that well, I think are going to be in great shape in 21. And I think pleased with the growth and development that they and their organizations experience as a result.
Yep, no doubt about it. Many companies are going to come out of this a lot stronger. It takes me back to a lunch conversation you and I had with your second point on really focusing on your customer base, and our discussion around gross churn and fill in, and being able to really the focusing on that gross churn metric and what the benefit is to these companies. So I agree with all of that. It's great. So Alan, thank you so much for joining us today. This has been terrific. I actually think we were pretty darn punctual too, which is great. And then I think the most important thing is, I've got a bunch of contractors here today. There was a little bit of hammering going on. Hopefully you guys all didn't hear it on your end, but for me, that was a huge success. So Alan, thank you so much. Cheers to you and to Vista and all the success you had. Look forward to working with you in the future. Thank you.
Thanks for the invite. Always great to see you, Alan.
Pleasure.